welcome to Newgen TV. I'm Runki Goswami, the Chief Marketing Officer at Newgen. Well, today we are in our newsroom and dealing with a subject that's extremely important. Well, to do justice to the subject, I have an illustrious panel that will throw light or more than light on the subject. And the subject is about Autopilot lending, the AI blueprint for seamless journeys. Well, let's do first things first. Let me introduce you to our panel and we take it up from there. So on my right, I have Peter Wannemacher. You are our guest speaker and the principal analyst at Forrester. Sandeep Hinduja, our business and sales head for North America. And of course, Varun Goswami, global product head at Newgen. Well, when we talk about Autopilot lending, which is the AI blueprint for seamless journeys, let's understand that lending has always been about speed and accuracy. It's not, or maybe the real challenge today is redesigning the entire journey, way above and beyond pressing the accelerator. We have got some questions from our viewers. They not only want to understand this topic more, but probably they're facing some challenges. They would want to understand how to navigate through those challenges, and that's where you come in. So let's dive in. Okay. So let's talk about the first segment. Why lending needs a redesign? Is it just about speed or is it not just about speed? What is it about? So Peter, I'll get started with you. Banks everywhere are racing to make loans faster, but you often say lending needs a redesign, not just a speed boost. Why do you say so?
So, speed still matters. As you said a moment ago, lending has been around for a long time, and it's always been about speed, risk, and accuracy, and predictive accuracy. In our research is what we find. Speed still matters. This is 25 minutes. Loan should happen faster than that in today's world. But speed, I'd say there's two factors that make us push for a more fundamental redesign, a rethink, really a reimagination of what lending can be, and AI is the enabler of that. The two big reasons why speed isn't sufficient anymore, one is that banks and lenders have already pushed the accelerator with their existing processes. A lot of the low-hanging fruit has already been, to draw this analogy out, kind of picked. They've gotten their loans from weeks to days to some amount of minutes or hours in some cases, and that's all good. But it's they've sort of gone as far as they could. Most lenders have. Number two is when you accelerate existing processes, you are often amplifying inefficiencies or issues. If what you're doing is simply speeding up a legacy process and using legacy tech in order to do that, as I said, there's already a fair amount of distance you can go in terms of shrinking that time, but there's only so much. Instead, what you want to be doing is understanding what borrowers want. And first of all, they don't think of themselves as borrowers, they think of themselves as people. And then understanding what they value. And yes, speed's part of it, but there's other factors, and even reducing the speed further, as well as improving predictive accuracy, ease of use. All of that, what you need to do is fundamentally rethink what lending is, and that requires redesign.
Mm-hmm. Well, you've left me at an interesting point. You use the word redesign. But Varun, what is redesign? I think nobody would know it better than you.
Yeah, that's a good point that Peter raised, saying that a lot of speed related activities have been taken care of. If you look at the lending journeys today, the real challenge is not speed. The real challenge, I think, is fragmentation. You've got input channels, applications coming from different channels, underwriting happening separately, disbursement, collections. All of these different systems, trying to talk to each other to get the journey completed. So a redesign today would mean look at that entire flow end to end and redesign or reimagine how that flow is going to work. And that's basically what we at Newgen also do. We look at orchestrating the lending journey across multiple channels, getting the low-code application framework in place for building your portals or mobile apps, getting the BPM to build the lending process, getting the AI ML based decisioning, the intelligent document processing, the entire stack as one platform so that your journey can flow seamlessly end to end. So I think that's what redesign means for us.
Okay. You mentioned, or just correct me if I'm going wrong. So, redesign means reimagining the entire lending life cycle.
Absolutely, yeah.
So, how frequently do you reimagine?
I think there are waves that come on. So if you look at the initial digital transformation wave that had come in from manual processes, we moved to digital processes, right? That was a reimagine. And like Peter mentioned, if you could just do an as-is, digitization of a manual process, you bring in all the inefficiencies of the manual process. So when you are doing a reimagining from manual to digitization, you did a reimagining of how a digital journey is going to work. I think with AI and especially generative AI now coming in and making it much easier to go through your subjective policies, your credit decisioning rules, this is now the time for the second wave of reimagining of how your entire end-to-end lending journey works.
Okay, on that note, hang in there, come back to you on this. And Sandeep, well, you work directly with lenders. And what happens when they chase speed without rethinking the process?
That is a very real issue, Runki. And as we engage with lenders on a day-to-day basis, we see that there is a tremendous focus on shaving off a few minutes from the overall approval process, right? So the initial attempt at modernizing before you get into transformation is either to increase the top line or improve the efficiency and hence a cost takeout play. But as we endeavor to shave off those minutes from the process, lenders come back and realize that there are multiple silos in which data is sitting, and those silos continue to present kinks in the overall journey. In one case, when we were working with a lender, the initial attempt was, hey, can we approve applications faster? They went ahead and did some piecemeal modernization and then came back and realized that uncovered costs emerged subsequently. The borrower friction continued to exist in the journey. And more specifically, things like your compliance checks keep getting triggered along the journey towards the end. Borrowers are requested for the same document multiple times. And that is because these silos of information that existed that were driving a clunky process continue to exist even though you're trying to modernize. So from our point of view, simply attacking speed as a lever may not give us the same results that we want from the overall transformation, and hence taking a platform-led approach to it, wherein you're looking at Newgen kind of systems which are AI first, and then they transform the entire journey from application processing to underwriting to dispersal and onwards to servicing as well. That we've seen gives our lenders a more holistic transformation that they want from such investments.
Well, Peter, you're, I think, day in and day out, you're working around this entire lending ecosystem. So given what Varun said about the entire redesign and then what Sandeep highlighted, and to your point as well, what more do you think is happening in this ecosystem? And
so I'll start by highlighting what both of you have gotten absolutely right. Our research shows that in lending specifically, the number one barrier on the company side, on the lender side, are data silos. And data silos are downstream of organizational silos and technology silos. And those are not mutually exclusive, of course. So what we see is that the either slow implementations or an actual inability to implement new technology, right? Including, yes, the number one or the most popular now, the most prominent is AI. And that can be sort of somewhat simple machine learning for better credit assessment, or it can be more advanced AI that gets into generative AI, and we're starting to see lenders move into agentic, or at least test out ideas for agentic. The bigger or the other factor here is what we see is a lot of lenders looking into pilot projects
Right.
where the idea is good. I mean, the good news for all of them, for most of them, I should say, there are bad ideas still out there, but it's often that there's a good idea, and a small team is charged with figuring it out, and they are able to test and prove the value of a new AI or sometimes machine learning capability. The problem is the data silos. It cannot reach the other, there are various compliance and credit and risk capabilities and teams and tech stacks that are siloed and fractured. And as a result, it becomes a really cool lab project that doesn't go anywhere.
Okay. Well, Varun, you left me with redesign. Picking that thread. If so, redesign is the answer. Why do so many transformations get stuck at the pilot stage?
Well, that's very interesting. And continuing on what Peter mentioned.
Well, just say there could be, while I'm using the word pilot, maybe POC also could be a word because
I was coming to that, yeah.
there's a lot of exchange or exchange happening between
Pilots and proof
and
of
POCs.
concepts. Yeah, I know that. And with AI and generative AI in particular, what is happening is almost 80 to 85% of these pilots are actually succeeding. And I'm saying as if it's a problem, I know that. But the reason is that they look at a very narrow, set of problems. The real challenge with these POCs is not proving the technical capability. The real challenge is your ROI. The real challenge is your scalability. The real challenge is your auditability, explainability. When a pilot is started, people tend to focus on, can I solve this problem using the latest LLM stack? Yes, you can do that. It's intelligent, it can reason. But how do you then deploy this onto production? How do you get your employees using this system, and as well as ensuring that you still remain compliant to all the relevant laws? So I think going forward, we are going to see a lot of use cases where out of these pilots, there will be ROI calculations coming in, there will be scalability considerations coming in, and then finally these pilots moving on to production.
And Sandeep, you are a field guy. You do a lot of sales, and I'm pretty sure that you have conversations with clients on running POC/pilots. And what do you have to say this? Why? I'm pretty sure there's the cost of getting stuck with these pilots or /POCs are very real. And what do you have to say to your customers when they are asking for too much of these pilots and POCs, and they want to perfect that?
Right, and I think, Runki, the cost of getting stuck, like you said, is very real. And from our point of view, as we engage with lenders on the field, pilots are more cost absorbing than POCs are, because you've got that angle of going live with a pilot and something, whereas you can control a proof of concept in terms of saying, hey, it did or did not work, and hence we may or may not want to go into a live pilot. But the problem, I think Varun articulated it as saying a pilot is still siloed. And you may spend a year, and this is a live example, one of our lenders spent a year running a pilot. And as they came close to deploying it at scale, the challenge of assimilating that pilot in their larger IT and ops infrastructure becomes a hurdle. You suddenly uncover compliance issues, you uncover redundancy issues, and AI has made that problem even more enormous, because underlying AI is your data problem. Under your data problem is your silo problem. And how you bring all of that together, pilots, we encourage our lenders not to get over obsessed with pilots. We have to take scale as a design principle right from day one, incorporate it into the execution, and have a real plan of how a pilot will only be an initiating precursor to a larger deployment at scale.
Right. On this note, Peter, I know it's one question that's crisscrossing my mind right now. So, given the technology is changing very fast, you wake up to a new technology every day. There's some or the other thing which is happening. So what do you recommend, pilots versus POCs?
Well, I'd go back to the first thing I'd say. You brought up something. We work with a bank who was talking about any kind of small innovation-focused project, which includes POCs, pilots, MVPs. There are differences, so I will answer your question, I promise. But they said, think of it like hiring an employee, training them for a year, and then saying, okay, this was fun, see you later, right? I mean, and companies do that. Right? There's internships and those are valuable, but you do not want to dedicate a lot of your money to hiring people that can eventually move into your real workforce or your scaled workforce. So the bigger risk is getting overindulging your tendency towards pilots or POCs. Between the two, it really does. I know this is a classic analyst answer, but it does depend on what you're trying to achieve and what the nature of the thing is. I think if you get to pilot stage, if you've done your work well and used design principles to think about scalability, and to think about this actually goes back to our early on in this conversation. We were talking about speed and you can only accelerate so much. When we talk to lenders, we actually talked to one just last month who was talking about, we can get our lending down to milliseconds, but it's only if every borrower, meets all of these criteria. Well, they're not going to.
Yeah.
And I don't just mean credit criteria. I'm talking about even just what you know about them, where they are, what they have access to, how many documents they have or have they seen before. So I guess if I had to choose, I'd go with pilot, but it does depend too much on the various factors.
Right. What is AI first, or what AI first lending looks like in action? Whoever, Varun, you could pick it up, or Peter, or Sandeep. I really want to know what AI first in lending looks like when it's in action.
I would say from what we've seen, as of right now, what it looks like is it is more of a continuous assessment of whatever it is, right? A continuous assessment in some cases of the creditworthiness of a given prospect. It could be a continuous assessment of your own processes, right? I mean, there's things like Turing bots that are used for testing your own internal processes. So the best AI implementations right now are often about, really, again, I would go to that sort of continuous attribute that's really essential. Mm-hmm. Where we think it's heading, and where we're starting to see some banks sort of think about, is AI that enables anticipatory experiences. Now I'm talking about external, talking about the ability for you to not just say, in the classic model, and I mean the old school model of someone comes to you and says, I want to borrow money. And you say, well, let me think about that. And then you think about that, or your systems think about it. There are certainly some interesting use cases out in the market where a bank using AI is able to actually say, proactively, we anticipate you need this. We can give you this contextual offer. We can say with confidence, meaning I'm talking about confidence of our own risk assessment and our own risk exposure, that we can give you this loan. That's where we think this is right. We're not there yet, but it's a very, if you'd asked me 5 years ago, it would have been like, that sounds so cool. It's not going to happen, or at least it's not going to happen in the foreseeable future. That future is now foreseeable. And I think that's really interesting. And so that's what we're seeing firms, banks, lenders start to do.
Okay. Well, Varun, you're the custodian of the Newgen platform. Well, you're the maker, the creator, the curator of that. Now take us inside Newgen's platform. So what does AI first stand in the context of a Newgen platform? Of course, it has to be in the technology and the product perspective.
Absolutely. I think there are three very critical components for any journey to be orchestrated. The first is the platform itself. Can the platform connect the journey end to end from the front office to the mid office to the back office? Right. The second is a lot of these processes are document heavy. So having the ability to do intelligent document processing, get data out of it, refine it, use it for decision making, that's the second part. The third is how do you orchestrate the agents also? So the agentic flavor coming into the lending journey where the agents can now look at all your data, your returns, your credit scores. These agents can run AI ML models at the back end, a probability of default model, for example, get that scoring. These agents can also be trained on the organization's set of policies. I think that's a generative AI angle which has come in. So these agents understand your risk profile. These agents understand what are your policies and procedures, and they have access to these algorithms running at the back end. And they have a platform, which is a Newgen platform, to orchestrate this entire journey. So I think combining all of this, a completely new kind of lending journey can be built, which can work across all of these channels and help take credit decisions quickly.
Okay, and we've been talking, or literally been using this AI first as a term, and Newgen identifies itself as an AI first transformation platform provider. Now, well, there are quite a few of these jargons which are going round robin in the market, whether it's AI first or AI led and AI enabled, AI native, and we call ourselves AI first Newgen platform. Maybe some insights into that. AI first over the other jargons.
I think broadly it comes down to two scenarios. Are you adding AI as just another layer on top of your platform? So everything else keeps running as it is and AI is just kind of a plugin on top of it? Or are you building AI fundamentally within the platform, which means your orchestration is AI enabled, your business rules management is AI enabled, your dashboards are AI enabled. So every component has AI baked into it. So I think that's the difference between AI led, where AI is just an add-on to your platform, and AI first, where AI is a core component of the platform itself. So that's where we envision saying that, AI led is not going to solve the entire problem. It's going to only solve one part of the problem. AI first actually helps you infuse AI into the entire journey, end to end. So that's the approach that we take.
Interesting. Well, Sandeep, coming over to you. You are very close to customers on a day-to-day basis, and you're on ground. So what does this AI first transformation mean to customers, end customers of banks, or even to the staff?
It's transformative. Let me share a real life scenario with you. But before I go there, thanks to all the work that Varun's team does, Newgen now has a U-shaped 12 to 18 month roadmap for lenders trying to go down the AI transformation journey. And these use cases are peppered across the lending journey in terms of the application intake all the way to disbursement and servicing as well. But in one case where one of the lenders started that journey of saying, let's start leveraging AI along the lending life cycle, the initial objective was obviously, like I was mentioning, can we process unsecured loans that we were today doing in, let's say, 2 to 3 weeks down to, like you were saying, milliseconds in some asset classes. They were able to achieve that. And while they were able to address many facets of the problems that existed, my favorite was the credit inclusion part. They suddenly had a set of borrowers with thin credit files who were erstwhile falling out of the guardrails of deterministic underwriting. Now they suddenly had a new set of borrowers to say, hey, can we look at these files? Point of clarification is AI is being used for approvals, not for declines because of compliance reasons. And then while we delivered this, many asset classes in that unsecured bucket came to near real time. The best part was a seamless journey for all stakeholders. So the borrowers were able to go through an application in minutes, get the decision real time online, and near real time gets funds dispersed as well in certain asset classes, right? Something that would take over 2 weeks before we actually went down this transformation. The burden of delivering that hyper-personalized AI-driven experience to the borrowers usually leads to a burden on the internal stakeholder, because if you're not transforming underwriting, you're now putting a strain on your operations bandwidth in terms of saying you guys have to keep speed. Our platform also addressed that facet where the internal stakeholders were able to also leverage AI in terms of their underwriting, initial decision making, final decision making. And they were able to produce tangible results for a set of goals that they outlined initially. And I think to wrap up the answer to your question, defining those goals upfront and then chasing that use case based approach for a tangible transformation is where we have seen real outcomes with our platform.
Okay. Peter, just a question which, again, I think is relevant over here. You talk to so many transformation specialists, you know. Of course, Newgen, of course, one of them, we have our conversations. We have regular conversations with you know. What do you see happening in the market? What kind of FAQs come to you when it comes to autopilot lending and when you have to bring in AI into the picture over here? So any recent FAQs that you've seen which trigger conversations or make you think more into it?
Yeah, so, I mean, the biggest questions are, is this real and what role does AI play? AI play. I'd say rather than those are the answer, by the way, is this real? Yes. What role does AI play? I mean, fundamentally, it could play a primary AI first role. No, I don't think in all processes, but in an increasing wide array of processes and use cases. What we get a lot of FAQs about as well, though, is the other shoe dropping, right? To use a turn of phrase. One of the ones we hear about a lot, which came up a moment ago, is we hear about, okay, great, it's faster for the borrower, right? Borrowers want the money that they're asking for. They want, and confidence that they will get it. They want the speed, which we've talked about a lot, and they want a reduction in pain, right? Like having to upload the same documents 4 times, or even twice. And they don't really care about the lender, right? I mean, they wish them well, but you know, on the lending side or on the lender side, what we hear a lot about is, okay, great, even if I can get it faster on this end, what does that do in terms of, am I seeing a spike in risk? From an underwriting standpoint, like, what does that affect? My processes aren't ready for that. And this gets back into what we've talked about a lot. So that's it. And then the last one is the regulatory question. And I said a moment ago, borrowers want 3 things and they don't care about the lender. Regulators don't care about any of that. I mean, they might care about them in some other capacity, but in their role as regulators, what they care about is traceability and explainability. And a couple of factors, right? I mean, there's from an industry-wide or a business standpoint, they care about resilience. But in the lending and as they're looking at those are both of those are affected by AI incorporated or AI-led lending capabilities, and that's a big. And there is a fair amount. I mean, where we see some hesitation on the part of lending organizations, that's often what it comes down to.
Right. I have one more question. I'm sorry. This is real insightful discussion that we are having here. So is the buzzword transformation today, or are the lenders also entertaining discussions on AI, or do they just say, let's stick to transformation? What is it?
I mean, I don't have the hard data, but I guess I'd say, I mean, I think that transformation is still a part of the conversation, but the question increasingly is transforming what? Right. And that is a big, so I would say that term is not out of vogue, but there's a harder look at what are we actually trying to transform. And to go way back to our early conversation, borrowers are looking for the money. They're looking for the speed. And as I said a moment ago, they're looking to avoid some things. They're looking to avoid the pain of uncertainty, the pain of friction. They don't call it friction, of course. And so everything else is up for grabs in terms of, so we started this talking about reimagining and redesigning. that is, I'd say, if there's a new buzzword besides AI, it would be that reimagination.
Okay.
Even edging towards kind of a first principles approach to lending or to whatever process you're looking at. In this case, lending is who I'm talking to a lot.
Interesting. Okay, so Varun, I have what my notes say that you've spoken about point solutions for lending are everywhere, tools for credit scoring, document checks, and customer onboarding. Well, I've picked it up from one of your last interviews. But you also keep hearing that a unified platform is essential, and that's what we stick to. Right. So why is that?
It is because I think what matters the most, and Peter, you very rightly said, what matters the most is the customer experience. You cannot drop the ball on customer experience. You ask customers for their documents twice, thrice, that's dropping the ball on customer experience. You expect the customer to again go back to the portal, fill some more information. If a customer has given you an application, you're not even acknowledging that you've accepted the application, that's a drop in the customer experience. And this seamless kind of a customer experience cannot be done unless you have a very strong orchestration backbone in the backend, right? You will always have multiple tools for doing specialized things. Maybe a lending management system, where the final loan application for file gets created and disbursements happen. But having this orchestration layer to make sure that the application process, the mid-office processing, the underwriting, the disbursement, collections, servicing, all of that happens seamlessly, and the customer is involved or is part of that entire journey is what actually leads to a good customer experience. So that's why I keep on saying having that orchestration layer is an absolute must.
Okay. And Peter, if you have to comment from a risk and governance point of view.
Yeah, so point solutions have some value, and they're not going away as a concept or as a model in technology and in financial services or in lending, but they do. I mean, from a risk and governance standpoint, they create blind spots. Not always, and not always the same size blind spots, but that's a major issue. And by the way, we're talking about internal governance, as well as, of course, the external risk of, regulatory risk, and larger, well, I shouldn't say larger, because in some cases, regulatory risk is the biggest risk, but there's other forms of risk. So that's, I think that it has to go hand in hand with a unified data strategy, meaning that strategy, you can't outsource your strategy, much as many companies sort of try to. But when you have that unified or single data strategy in place as a lender, then that's right. There's enormous value moving towards necessity in having that unified platform. It doesn't eliminate risk, nothing does, but it reduces it greatly.
Okay, and Sandeep, what have you observed?
From the field experience point of view, the difference is real, and I think when we work with lenders, their first endeavor is to make the journey effortless, both for the external stakeholder and the internal stakeholder. From the borrower point of view, it's one single application quickly filled in with minimal data entry. One of the chief digital officers of a lender we worked with said, if I have to ask a borrower to key in their zip code twice, the process is broken. And today we are able to deliver that experience where what would, in case of heavier application assets, would be a 3 to 4 hour journey to fill in an application has now been squeezed down to under 15 minutes. And I'm talking about heavy applications, things like mortgages. So from our point of view, AI is real. We have delivered tangible outcomes. And the delivery of that experience has also been accompanied by reduction in compliance overheads, reduction in data re-entry by the staff repeatedly, and an elimination of going back to the borrower for asking for documentation. So the overheads that we've solved, really two challenges that pre-existed the AI world, if you may, were number one, dependency on the borrower for borrower-specific data. Automation solved that, but I think AI took it to a new leap. And two, third-party services, in which case you were waiting on whether, you're talking about appraisals, you're talking about, reports in some asset classes where, there's a dependency of third party. AI is able to now solve those problems in multiple facets. And those two have rendered a truly frictionless journey for all stakeholders.
Okay. Now let's get closer to the ground in the sense. Let's talk about a practical path forward. There's a lot of theory around AI. I still get to hear conversations which are at 50,000 feet high, and then I also get to hear something which is like real, and we've been talking about the real use cases, real case studies, real things which are happening around us, specifically in the lending world, that is. Now, on this note, I would like to go to our office in Tampa, where we have our correspondent talking to our subject matter expert, Greg Sullins. Well, he is the head of the Center of Excellence that takes care of banking. So let's hear from Greg what he has to say.
Thanks, Runki. I'm here at Newgen's Customer Experience Center, where we're seeing banks and credit unions from across the globe embrace Autopilot lending. A perfect example here includes a U.S. retail bank that recently moved their personal and auto loan origination to Newgen's AI-first lending platform. And before their transformation, processing an unsecured personal loan could take them up to 3 to 5 days, with staff mainly reviewing applications and verifying documents. Now, with Newgen, they have intelligent document processing, real-time credit decisioning, automated KYC checks, and approvals happening in less than 1 hour, all enabled by straight-through processing and complete auditability. The results have been impressive. Loan approval times are down by 75%. But more importantly, the loan booking rates have increased by 21%. Overall loan volume is up 18%, with operational costs down 32%, and that will continue to improve. Customer satisfaction scores are at an all-time high. So it's clear that AI-driven lending isn't just the future, it's delivering measurable results. Back to you, Runki.
Thank you, Greg, and thanks to the Tampa team. Now, for leaders watching this episode today and wanting to move from theory to action, what's the smartest or the first smartest step that they should take?
So I said earlier, I don't like having analyst answers, but sometimes they're the right answer. I think it does start with a maturity assessment, and that sounds like that sounds like it should have a trademark at the end of it. But I actually mean that. What I mean is taking a deep look at your own organization, your processes, and your data infrastructure, and looking at what you need to improve so that you can implement any of the technologies that we've been talking about, including some of the smaller ones, or I should say small, some of the more narrowly focused. The good news for banks and lenders is they should have a good sense of what those systems are and where they live. They also should have a pretty good sense of the journey that they're trying to improve upon. I urge lenders to genuinely reimagine what lending can be, besides the fundamentals of borrowing money, speed, confidence, predictability. But there's a lot up for grabs there, as I said earlier. But the good news is you start by saying, what are the journeys that we are looking at? And then where does that hit our different systems, our different teams, And what does that look like? And most lenders and banks have someone who owns data governance. That person should be your first call. But it's, have them. You don't need to understand every single facet of all the API management system you use or whatever it might be, or master data management system. But you do need to understand where you are as an org. So that would be the first step.
Okay, what about you, Varun? What do you have to say about the first step?
Yeah, I always, recommend that if you're trying to do a pilot or an MVP, try to do it for one type of application and try to do it end to end. Instead of saying, okay, out of this, my entire process, can I automate this particular part? Let's say the document parsing, can I put IDP? That becomes a very narrow focus. So what I always say is, take up any one journey, but try to do it, automate it, or try to transform it or reimagine it end to end. And most critically, look at all the subsystems that are within that journey and look at how you will individually scale these subsystems. AI/ML require a decent amount of hardware, but generative AI, if you're planning to use, requires a very different level of hardware and pricing. So all of those components, how are you going to individually scale those components? How much is it going to cost you? Automating that entire journey, and then use that pilot success to then further roll out other types of loans, whether it's SME lending, whether it's corporate, whether it's mortgages. But yeah, if you're doing a pilot, do one end to end, reimagine the journey.
I was just going to amplify what you're saying. We worked with one bank that had worked really hard on a personal loan application process, and they had thought about it they thought about it carefully and robustly. What they hadn't realized, though, was that the problem was the application was fed into, they fixed the whole sort of front end process and the basic application flow and documentation. And yet, literally, there was a kink in the process further in, which is when it came to the loan processing, literally the back end loan processing, there were still people doing manual data entry on the back end, and that they hadn't touched it. As a result, it was this really fast beginning, and then it wasn't milliseconds. It was a lot longer than milliseconds once they went through that. So we've seen that's one example, but I don't think that's an outlier. I think that's a pretty common.
That's a very common
thing. Yeah,
absolutely.
Okay, Sandeep.
So from our point of view as a leading AI-first lending platform provider, what we encourage lenders to also understand is that while AI is landscape changing, if you may, the core concepts still stay relevant, and that is transformation must cut across people, processes, and technology. So as we initiate these transformation programs, we encourage cohorts that run across ops, risk, and IT. And then as you co-create the solutions that AI can enable, we encourage infusing these transformation programs with change management and adoption control, so that when you scale these pilots or MVPs or POCs, it's the adoption by the users, both external and internal, is natural and sustainable and long lasting.
Okay, interesting. Peter, Varun, Sandeep, it was great having you here. Very insightful discussion. At least I learned a lot. Any closing statements from you?
Thanks for having us. This was fun, and we'd love to continue the dialogue with our customers and with our stakeholders as well.
This was great. Yeah, thank you very much.
Okay.
Thank you. Thanks for having us on this TV show.
Okay. And on this note, I leave our viewers with 4 key takeaways. One is redesign the journey, not just the speed. Break silos and avoid pilot paralysis. Trust a unified AI-first platform for end-to-end confidence, and start with one impactful lending process and scale. Well, on that note, it's me, Runki Goswami, signing off. And for any questions that you have on this topic, which is Autopilot Lending, the AI blueprint for seamless journeys. Do feel free to reach out to us and we'll be more than happy to answer your queries. Thanks once again. Bye-bye.